Good morning and good evening, everyone. I would like to welcome each and every one of you to our Efma webinar on the power of banks and fintech innovation. This webinar will take approximately 45 minutes and the session will be recorded. Let me quickly guide you through our agenda. We will open this webinar by a short introduction to the topic by Carlo, who is among the pioneers of the digital banking, and he's considered a visionary innovator and one of the most recognized fintech leader in Europe. He has worked in the banking industry as management consultant and as bank manager for over 30 years. Welcome, Carlo. And after that, we will have a presentation by our next speaker, Jeremy Balkin, who is regarded as leading international expert in ethics in banking, fintech innovation, and strategic engagement. He is currently the head of innovation at HSBC Bank USA, and he is also an advisor to the leading global accelerator program, StartUpBootCamp FinTech in New York City. After Jeremy's presentation, we will have 10 minutes to your questions. Please raise your hand icon on your left side, or you can use chat where you can ask questions. You will be muted during this session in order to avoid any background noise. So if you do have any questions or comments, let me know by chat or that hand I mentioned. For now, this is all from my side, and I would like to draw your attention to Carlo, who will start off this session. Carlo, the floor is yours.
Thank you, Mirka, and welcome to everyone from the sunny Milano city. We have the honor to have Jeremy, that is responsible for the innovation in HSBC US, and he will conduct through their experience in the banking and the innovation arena. And I'd like to start the webinar with Jeremy. So I hand over him the beginning of the presentation, so we can then discuss during the presentation some question or clarification, and then we can discuss the questions that come from the audience. Jeremy, floor is yours.
Thank you so much, Carlo, and hi to everybody who's spending the time on this webinar today. As Carlo and Mirka and others so kindly introduced me, my name is Jeremy Balkin. Forgive my accent. I'm from Australia, so it's a bit confusing. I work for a British bank that has an Asian name. I live in New York. My parents are from Africa, but I was born in Australia, and my accent is from Australia. So I apologize in all my enthusiasm and excitement if I speak too quickly. If anyone has difficulty understanding me, please interrupt me, pause me, ask a question. If Carlo, for you and the organizers, if you want me to explain something in more detail, I'd be only too happy. I prefer an interaction in conversation, so happy to answer any questions, including the best time to visit Australia, including anything anybody is interested in. So maybe I'll start at a high level. Thank you sincerely for the opportunity to be here, and the European Financial Markets Association, of course, HSBC is honored to be partnered with and involved with, should I say, and we were delighted to further the interest of bank and fintech innovation collaboration for our customers, for our people. I think it moves our industry forward in a positive way. So always happy to participate. So maybe at a high level, let me share some thoughts around innovation, because of course innovation, the word, means different things to different people and certainly different organizations. So when I joined HSBC in 2015 here in New York, of course, innovation as a word and a role did not exist at that time. So the first thing I thought I better do is create a definition that everybody could understand and, of course, buy into that message. So the way we define innovation is doing something differently that creates value. So I'll say that again a little bit slower. Doing something differently that creates value. There are two key variables in that definition. Number one, of course, is challenging the status quo, doing something differently, but it has to create value. At the end of the day, big organizations, no less banks, the CEO is accountable to the board and to the shareholders and to the community, and ultimately, if value is not being created, then then indeed it's not really true innovation, or indeed the skepticism within big organizations towards this term innovation will just perpetuate and then kill innovation, and then the status quo prevails. So at the end of the day, the reason why I want to have a clear definition is that the way I define innovation, it's not only about technology, although clearly that's important. Every single person in the organization, from the security guard when we walk into the building every day, to the receptionist, to the frontline customer service people, the bank staff, the bank managers, the investment bankers, the CEO, the reception desk, the call center operators, the back office staff, every single person in HSBC can, quote, do something differently that creates value in their day job. So every single person needs to be thinking about themselves in the innovation team, not just the crazy Australian guy with a funny accent who's leading innovation. So that's very important. We've tried to embed this concept of innovation in the DNA of everybody. So it's not just like a special team, it's really the DNA, it's business as usual, it's in the DNA for this organization. And by the way, that same definition I think applies to every company, not just banking, and really should, because, you know, I think our customers these days, there's a lot of competition for their time and attention, regardless of whether they're in financial services, retail, hospitality, travel, media, you name it. So people's attention spans are shorter, the competition is ever more intense. So you have to really be adding value to their lives. But not only that is, we all benefit from the industry innovating together, more collaboration, more fintech, because it delivers a superior customer service, it reduces the cost to serve, it increases economies of scale, it improves the perception of banking and financial services in the minds of customers, especially, might I say, skeptical millennial customers, some of the younger customers who've been very maybe adversely impacted by the financial crisis and the role of banks in society, etc. I think it's very important to have that debate with them to re-engage, and innovation is clearly part of that. It also helps to attract talent to the industry. We want new, diverse talent to come into financial services who've been maybe turned off by financial services in the last 10 years and more attracted to the technology sector or other sectors. We want to attract the best and the brightest minds from diverse backgrounds, different set of ethics, different skill sets, different backgrounds to come to financial services. That's how we change the culture in the industry, and we make sure that we remain relevant for the next 150 years. I talk about HSBC briefly in the context of innovation in our DNA. If I can take a very quick moment, I said earlier when I was trying to explain where my accent came from, I mentioned that I work for a British bank with an Asian name, and of course I'm based in America. Often people ask me about innovation in banking. Is it possible? And the way I think about it is HSBC, when it was created in 1865, that's 154 years ago. Now, I must confess, I was not alive then, but I've read many history books about HSBC, and I know that HSBC was founded by two fellows effectively from the UK who were based in Hong Kong, who had this audacious desire, this dream, this ambition to fund or finance trade with the United States. Now, in 1865, the way I think about it is that's a fintech company building a logistics. In many ways, it's the Amazon of financial services that was created at that time. And of course, 154 years later, how many startups don't exist anymore, or how many big companies don't exist, let alone that little startup, that innovation, that audacious dream of a few founders, and look at the bank today. So I think it's a very humbling reminder of where everything starts. And again, the diversity of, it's a British bank, it has an Asian name. Of course, I'm based in the US, which is the biggest economy in the world. And of course, I'm Australian. So, I guess I'm the odd man out, but I've always tried to use my background and my diversity and skill sets and to help influence and be what I call the odd man in. Because doing innovation, it's very easy to talk about innovation. Everyone loves to hear ideas. It might be a nice mental distraction from one's day job. But at the end of the day, it's about execution. Talking about things is easy, doing them is much harder. And in financial services, with the regulatory constraints that we have as an industry to keep our customers' information safe and to protect the integrity of the industry, to make sure the bad actors can't use the financial services sector, and it's important that there's a recognition in the marketplace that often people say, well, why can't my bank be more like this tech company or that tech company? And sometimes there's very good regulatory reasons why. Mm-hmm. But having said that, so in other words, it makes the possibilities of what's possible for a bank, it makes them less than a tech company, for example, that's not regulated the same way. Having said that, and I always say this to my peers in the industry, especially at conferences, that doesn't give the banking industry an excuse to be mediocre. That doesn't give the banking industry an excuse to say, you know what, we're highly regulated, we can't deliver an amazing customer experience, we don't have to do innovation, why do we need a partner? No, it means you have to double down and be even more progressive in how you think about this stuff, because customers have more choice today than they've ever had. And with the advent of fintech, for example, and competition, you have some of these mobile platforms, for example, who do one thing exceptionally well. It might be one product or one service that they can deliver faster, smarter, cheaper on a mobile device when, where, and how a customer chooses. And maybe a younger customer, for example, doesn't need all the services that a bank can offer, but they need one or two, whether it's payments, moving money, a credit card, etc. And they build a loyalty to a fintech company who do one thing, and that's the threat to a bank. Having said that, that's why we need to rebuild from within, because the role of the bank in society is very important. It's historically been very important for economic development, for security. The bank is the center of the town or a community, but also in terms of the bank has the customer and the wallet, effectively, the bank account. And so therefore, it's a very good basis for, taking advantage of competition. I think competition is a good thing. I love competition. I welcome it, especially from fintech. That's why we've taken a view at HSBC, here in particular in the US, to partner with fintech companies to deliver, better experiences. Was there a question, Carlo? Sorry.
Yeah, I'd like to ask you a couple of questions.
Sure.
In following your idea of innovation and value, two questions on this. The first one is there is somehow digital transformation, disruption, So in your concept, innovation is everything. So it can be even improving the customer service in the contact center, or can be jumping on WhatsApp to do banking, So are you working across all this, let's say, broad range of possible topic, or you are more focused on specific? And this is the first question. Second question is,
how can I answer the first question first?
Yeah.
Sorry,
okay.
It's easier for me one at a time. So I think it's a very good question. So I think if I can maybe paraphrase the question, are we focused on more front office or back office or retail or consumer or wholesale bank? I think 95% of what a customer sees, how they touch the bank, is through retail. It's through the consumer end of the bank. But maybe 95% of the value of innovation is going to be on the institutional or the wholesale side of the bank, if you think about it. So it's a delicate balance between how we allocate my time and my team's time to solve real problems and challenges for the bank, whether it's on the retail side, the consumer-facing side, or indeed on the wholesale side of the bank. For example, the contact center or the call center is a great example. A customer might interact with the contact center, the call center, but they don't see them. And these days, customers want to bank 24 hours a day, 7 days a week. The contact centers operate 24/7 effectively. They're in different markets around the world to optimize time, access, information, language for the different time zones, etc. So there are many, for example, ways of innovating in the contact center, whether that's through natural language processing, using artificial intelligence to solve basic questions. But we know 95% of the interactions are more or less standardized. And if you can free up the time of the wonderful agents who are on the phone, and the artificial intelligence and the natural language processing can help to solve those queries really, really quickly, it's a great customer experience. And then if we can get 95% of the time back to our people, they can spend essentially working on very personalized, higher value needs for the customer that maybe can't be solved so simply. That's a better customer experience. It's an example of things you don't see, or a process improvement in the back end that, again, the customer doesn't feel it, doesn't see it, but they feel it. And that's a lot of where the value is derived. So it cuts across the whole bank.
Mm-hmm. When you say value, you mean economic value or customer value? What is the focus?
That's a great question, and you could actually look at defining value in more than just economic value or customer value. So, for example, the value can mean a revenue impact. For example, it can have a positive impact on revenue. It could have a positive impact on reducing the cost to serve, which is good for the bank because it lowers costs, but it's also good for the customer because they get more value for money for a service, for example. There's also value to employees. I mean, don't forget if you get an angry customer, who has to deal with them? It's the banker. It's the people in our industry, I think, who've been arguably the most impacted by the last 10 years in financial services. And you look across the industry at morale, employee engagement scores, attractiveness of financial services. So, we want to raise morale in the industry of people who work in the industry, and that's value as well. So if you think about some of the things we've done is with the employee in mind as much as the customer. How do we, for example, that's why we did the partnership with Samsung to trial the world's first deployment of wearable technology using the Samsung smartwatch here in the US, but it's also happening in my colleagues in the Middle East, in Dubai, for example, is how can we optimize in a trial how our frontline staff speak to each other and communicate, and the results were staggering, but the biggest was not only the efficiency gains, which is important, it can serve more customers in less time, which reduce customer waiting times, so customers are happier, it improves waiting experience, but how do our people feel? We interviewed our branch manager, he said he feels like James Bond. He feels, another one in the team said, no, they feel sexy. They love the investment in the people, the technology. It's always thinking about the customer. What about the people in banking? And I think it's important, and because the way we think about customers, you have two customers. You have the customer on the outside who pays you money for a service or a product. But you have your employees or a customer on the inside. And I think it's important to have them in mind, because a happy employee, I think, gives you a happy customer.
Of course. And what can you give us some example of the innovation you're delivering in this moment, or you just delivered?
Yeah, there's a few. So some of you may be familiar with what we did with Pepper, the robot. We did that with a partnership. We love partnerships, so we partnered. Well, I just mentioned Samsung on wearable tech in my answer before. That was the world's first known deployment of wearable technology in a bank branch. Of course, the name Samsung everybody knows. Most recently, I was in Miami last week. My team deployed the first consumer-facing robot in the city of Miami in the state of Florida. It's now the fourth market we have Pepper, the robot, designed by SoftBank Robotics in Japan, at a bank branch in the US. So we're in 4 markets now. We've launched that. The first branch in New York about a year ago. Now we're in 4 markets. We're in Miami last week. Hugely successful. We've had over 25,000 customer interactions. We've had 60% increase in new business at the branches where Pepper has existed. We've had a record. We were in Seattle recently. We put Pepper there, to delight customers, to excite, to gamify, if I might say, the banking experience, make banking fun. We had a record, the highest ever recorded branch customer satisfaction score in the 1 month after we launched Pepper in Seattle. We've had 99% positive sentiment across all media, and we've had over 1 billion social media impressions with regards to HSBC and Pepper the robot. Might I say to everyone listening, we all know how hard, especially in Europe or in the UK, for example, it is for banks to get nice, favorable, positive treatment in the press. And often when the banks get press attention, it's not positive, it's negative. Someone wants to beat up the banks, which, by the way, that negativity feeds off on the employee morale and things like that. Customers don't like it, employees don't like it. So the fact that this was a story about robots and a bank in 2019, when there's a lot of talk about automation and what's that going to mean for the future of work, you know, to me is the most heartening that our case study not only has put a smile on our customers' faces, on our people's faces, but also it's actually delivered real, tangible, phenomenal business results. And by the way, we've had to add more people because more foot traffic means we need more people to serve them, not replace them. We need more people because that's how you work together. Technology, it's not, you know, I think the myth, and it frustrates me when I read the newspapers these days about this whole concept of the future of work and robots are going to replace people. You know, if that's the attitude, we're all in trouble. You know, technology and people need to work together. That's how you get the best outcome. It's the same like they said 5 years ago, fintech's going to take over. Well, you know what? If we're still talking about fintech and banks like two adversarial things, in 5 years we both lose. We have to work together. We fundamentally believe in partnership, the power of collaboration. And that's why all the things we've been doing have been through partnerships with some of the names I mentioned, like Samsung, like SoftBank Robotics, like Avant, for example, and the lending platform we built on a mobile phone that's coming. We're launching that to customers in the next, we've just done a beta trial. We're launching that to customers in the next few weeks. Here in the US, for example, we've done a partnership across Canada and the US with a company called Biz2Credit on business banking, a mobile origination journey. There's some very exciting things happening in Asia, which I can't name, but watch this space. And of course, my colleagues in Europe are doing some great things as well.
Mm-hmm. Another question, you said before you're a Chinese bank with an English name, or the contrary. You are competing also with some of the GAFA and BAT, let's say, no? So can you give us some example on how you are dealing with Alipay, or are you giving with Amazon and so on?
Yeah, it's a great question. So just to be clear, we're a British bank that has an Asian name because the H in HSBC is Hong Kong and the S is Shanghai. So it's a little bit confusing, but it demonstrates the breadth of our diversity and global nature. So, you know, it really depends how you view the world. Do we see these companies as competitors? Do we see these companies as partners? Can they be both? You know, how do they view banks? And also, depending on the regulatory situation in a particular region or market, sometimes they are competitors, sometimes they're not allowed to be competitors in that regard. So we know all the names that you mentioned and plenty more. I've met them. We interact with them in other markets. Something that we did that was quite interesting in Hong Kong, for example, is we built something called PayMe, Payme, which was a peer-to-peer payments solution for HSBC customers, and then it went open markets to non-HSBC customers through our mobile banking app. Some have said since, you know, well, that's like to compare with Alipay, things like that. You know, I think it's just to give our customers a great mobile experience to move money. But again, do you look at the glass as half full and you say, you know, that's just, we're doing this for customers, or you say half empty and we're here to compete? I said before, you know, I think competition benefits all of us, especially our customers, and I think it's important for the industry that we have this outside interest to improve the customer experience in financial services in its most broadest form. And a lot of these big technology companies have these huge platforms, and some of them, depending on the market, are looking at financial services as a vertical to compete and create new business. For example, China is a good one. But in the US, for example, which is still the largest economy in the world, no tech company wants, you know, the technology companies here, and there are some huge ones, they are very happy to have, and by the way, the US companies that have global reach, right? They're very happy with the regulatory environment in which they operate. Of course, none of them want to be regulated like a bank, which is a very different regulatory environment. So that's why you haven't seen, for example, the big US tech companies essentially become banks or try to really compete in financial services. Because the minute you start doing certain financial services, you're going to be under the under the radar of banking regulators, and the risk for the technology companies is that means their entire business will be under that regulatory situation. So that's why you haven't seen in the same way, for example, you've seen in China with Alibaba, etc. It remains to be seen. There might be a healthy medium between the different environments. I know in the Europe with open banking, obviously that poses other opportunities, but also maybe some threats. I think it also remains to be seen, for example, with a lot of stuff that's been going on in the world in the last few years, with customers maybe realizing, maybe they weren't aware, but they've realized the hard way about the value of their data and what technology companies are doing with their data. And maybe they weren't so happy about it. Maybe they feel like an ethical breach of trust. Now, historically, the bank is the metaphor for trust in society. And I think counterintuitively, actually, banks, that's a competitive advantage for a bank going forward, especially in this open banking world. Some of these technology companies or fintechs don't have the trust that have been built up over centuries for banks. They've never had to really explain to society what their value is. And then when you have these ethical failures of some of these big tech companies with what they're doing with personal data or how they've been monetizing people's data, I think customers are kind of thinking, do I want some of these big tech companies to have my access to my bank account as well? And it remains to be seen, because this is all new, how this is all going to evolve.
Clear. And what about Europe? I mean, HSBC is also very active in Europe, and there is a huge opportunity now with the PSD2, for banks and also competitor to jump into the banking market. Are you planning something special?
We're very proud of our European footprint. I think, if I'm not mistaken, often people in America say to me, when they meet me at something, they say, HSBC, you're the Europe's largest bank. That's always a nice touch for me, because, of course, given in fact, actually, my family, before they went to Africa in the late 1800s, are from Europe. So for me, I always feel very, very proud when I'm referred to as a European bank. So I think it's fair to say that Europe, the European economies, in aggregate terms, have been going at a different speed to the US. In some ways, the open banking piece is opening new opportunities for banks and financial services and technology in Europe that maybe isn't happening in the US. So that's a good thing. We've certainly moved with regards to open banking with something we created. My colleagues in Europe created something called Connected Money. Quite progressive with the innovation there, and we're very proud of that. And really adapting to the changing environment to be successful, because we want to serve customers when, where, and how they choose. We built a new mobile banking platform that's been deployed in various markets, recognizing changing customer behaviors, recognizing the customer behaviors that we need to adapt to as an organization. And I think if you're young and you're European, maybe you've been skeptical of some of the national banks, maybe through the financial crisis over the last 10 years. Maybe that's smart to be aligned with a global bank like HSBC that has a global footprint in different markets, because maybe it's safer. Maybe if you're young, for example, you're a millennial, you like to travel, you like to move money around, you want peer-to-peer payments, we're the bank for that customer. The international customer, I think, is our competitive advantage, and we're in an increasingly a globalized world where people move temporarily to live, to work, to study in different countries. Mm-hmm. And again, we naturally fit in with that for that customer demographic.
Mm-hmm. Okay, Jeremy, thank you for this part. I will like to ask the audience a question, because I did it. I interrupted you with some clarification. I'd like to listen the other people and give them the opportunity to have HSBC answer to their curiosity, question, or doubts.
We have one question from the audience, which says, will the large banks be able to survive the fintech revolution, and what should they do to do so?
That's a great question. So I'm very confident that HSBC will survive the fintech revolution, so to speak. I say that because, very humbly, by the way, I say that because I've thought a lot about this question. And I think that over 154 years, HSBC has built up a client base of, something like 50 million customers. We're in different markets. We have geographic spread. We have different business lines. We have a diverse makeup of our revenues, and so on and so forth. So I'm confident that we will survive. Can I say the same with some of our competitors? No. Without mentioning names, I think in many ways, there has been an arms race amongst banks to, number one, adapt to the new regulatory environment over the last 10 years, and rightly so. And adapting has been expensive, right? And so some banks have been able to not only absorb the costs of the increasing regulatory environment, but also to invest in technology at the same time. And some banks haven't been able to do both. And those who haven't been able to do both, I think, are at risk, because in the same period of time, you have fintech competitors, you have other banks that have transformed, fintech competitors have sprouted up, customer behavior changing, the mobile revolution, etc. I would also say that on the flip side, the fintechs that will survive in the long term, there won't be that many. A reason I say that is very simply because to sustain a sustainable business over the long term, you need customers, arguably with more than just one product. You need the license, the regulatory license to operate. You need your own balance sheet in case there's a time of stress. And there's various other, hallmarks and criteria to be successful. And I think what we'll probably see, it's more likely that those fintechs, for example, who are able to successfully either raise their own balance sheet, obtain millions of customers with more than one single product, and also those fintechs who can partner with a bank successfully, or have proven that ability to not necessarily compete, but to collaborate, will be the winners. And so I think you'll probably see in the next few years a lot of these fintechs run out of money, or they'll merge with each other and sort of have to build scale through merger and through necessity. But I don't see, we see thousands and thousands of fintechs popping up every year, in addition to the thousands and thousands and thousands that already exist. But let's see how many of them are operating in the future, and they're more likely to be working for a bank in the long term than they are independently. That would be my prediction. But who knows? Maybe we'll do this webinar in 10 years' time, and we'll see if we're right or wrong.
Yeah. Jeremy, what are the fintech that you fear most, if any?
Well, let me explain philosophically how I view competition, because this will explain my answer. So if I had to give you a very short answer, the answer would be none of them. But let me explain what I mean. The way I view the world philosophically is we are competing with the customer for their time, for their attention. Okay? So that means if I'm competing for the time and attention of the customer on their screen, whatever that's a phone, it could be a laptop, a desktop, a tablet in the branch, for example, in that case, or indeed via other channels like voice, for example, or on an ATM. If we're competing for their attention, the right to bank them when, where, and how they choose, then we're not necessarily competing with other companies in the traditional banking sense or fintech. You're competing in theory with what was the customer's expectation. That customer's expectation might have been Amazon. It might have been Facebook. It might have been eBay. It might have been PayPal. It might be not financial services. So in other words, the competition is much broader than just fintech, because customers have a different expectation of how they want to interact with any company in any service. And so therefore, when you think about that, it's a different conversation. So I'm not fearful of the fintech. I'm not losing sleep over the fintech, especially because we work with so many of them. I'd rather work with them and help them be successful for our customers, because we share the same customers. But none of them scare us, or me personally. And again, I think about this very humbly. I've thought I've argued many times either way to try to challenge how we think about this. But at the end of the day, I think the customer is that we have to fight hard to compete to the right to be in the customer's thoughts and the wallet. Financial services is a very important structural industry for society. We have to do it the right way. We have to compete the right way. We have to win the right way. And frankly, as customer experiences have changed, it's not competing with fintech. Actually, fintech need to work with banks and vice versa for us both to survive.
Mm-hmm. Clear. Okay. Any other question, Mirka, from the audience?
No, this is everything. Thank you so much, Jeremy, for your very valuable and interesting insights. And now I would like to ask you, Carlo, to conclude this webinar and talk a bit more about our other initiatives.
Yes. First of all, thank you very much, Jeremy. We, as Efma, have an innovation and fintech, let's say, organization that have a different service to offer to the members of Efma. So the first one that I want to recall to the audience is that on the 14th and 15th of October, there will be the next Innovation Summit that will be held in Paris, and we will have plenty of bank speaking. And if you can turn also the slide, you have also the second day participants and speakers. And what is relevant, I think, is that we have a very good mix of banks, so hands-on and first-hand experience. We have a top-level consultants and a solution provider that can and normally give a lot of insights to the participants. And it's a very good also opportunity to network with the other banks and people to be updated what is going on in the market and what the other banks are doing. Another initiative that we have next slide is the Council, Innovation and FinTech Council. I'm the director, and Paul Kelly is one of your colleague, is the chairman of this council. We meet with the banks that are participant to the panel. Normally are 20 participants in 3 times a year. So we had the first meeting in Lodz in Poland. We've been hosted by mBank. The next meeting will be in Vienna, hosted by Ernst Bank, and the last one for this year will be in Morocco. So we will have, let's say, meetings in which we share what are the main initiative on innovation and fintech by the hosting bank. We have a collaborative session and workshop together with the bank participant to these meetings, and industry and fintech presentation. What we spoke about was innovation governance, PSD2 best practice example and use cases, bank and fintech collaboration. One example was, for example, chatbot and fintech trends. So these are the topic we cover in the last meetings. Last but not least, we have the FinTopvisor is a fintech library that we are designing and implementing with the collaboration of Capgemini, and we are collecting the most valuable fintech, and we are also in collaboration with the Capgemini evaluating this fintech with the stars, let's say, And in this site, you can also contact the fintech that are relevant for your bank directly through the platform, and also participate to the collaborative community and the possibility that we give to banks and fintech to connect each other. Last are information that we provide, and we just released 3 reports: so the World FinTech Report, the Bank Plus FinTech Report, and the peer-to-peer payments that are interesting report that can be useful for your bank to make some strategic decision. So more or less, these are the service that we are going to provide in the next few months. For any question, I'm available. We are together with Efma. Vincent Bastide is the general manager. We are defining the plan also for next year, so open to your requests and questions. Also for the next webinar that we will do in October. The topic will be decided in next week, according also to your feedback. So please, if you have a suggestion or if you have let's say, ideas that we can, how we can improve this webinar, of course, we are more than happy to listen to you. So from my side is all. I don't know, Mirka, if you want to say something more on that.
Thank you very much, Carlo. Once again, I would like to thank all of you for joining us today. And I would like to thank especially you, Carlo, and also Jeremy, who provided us with very interesting insights to today's topic. And I'm very glad that you had very lively discussion. Tomorrow you will all be sent a follow-up email which will contain a video recording as well as presentation which was shown today. If you have any questions, please do not hesitate to contact us. We will be happy to help, and our next webinar on innovation and fintech will be held in October, and you can find all the necessary information on efma.com. Thank you all once again, and have a nice rest of your day.
Thank you very much.
Thank you, everybody. Thank you so much.
Ciao, Jeremy. See you next time in Australia.
Or Italy.
Yes, of course. Thank you.
Thank you. Thank you, Mirka. Thank you, everybody. Have a great day.
America.